Hey guys, Freaky Finance here. Last week we looked at Capri. This week we're going to go back into biotech for an oncology play. Now, oncology, if you guys don't know, is the study of cancer. Usually cancer is a hard place for a biotech to be in. This rate's usually lower. Anyway, the reason why I'm looking at Zymeworks today is I was looking on the latest 13F filings for March 31st, and I noticed there's quite a lot of companies that have been holding this or adding to this position, and they're all healthcare names that I follow. If you guys don't follow certain names, just for reference, Perceptive Advisors is a pretty good healthcare company or healthcare fund that invests into some pretty interesting names, and they own 9.3% of this company. It's a big fund, so they own 136 million, but this company is only worth like 100 or 1.3 billion. You can see they have almost a 10% stake. Again, these two funds are also, I know this one's predominantly healthcare. I think this one's like half healthcare. You have Micheal Burry in here all of a sudden as well, which is interesting, though his fund is only, say, 100 million, so he only has 8 million in, which is not even a percent of his fund. But overall, pretty interesting. You got quite a lot of names in this cancer play for biotech. And so I was, okay, what's here, right? So go to the 10K. I say, okay, this is fairly interesting, right? It's basically there's two drugs, and there's zanidatamab, which is formerly known as ZW25. And basically what this one does is it targets two sites in the HER. And their kind of interesting angle here is that they're targeting HER2 positive cancers, but they're also targeting ones that have a low expression, as long as they still have some expression, even if it's lower. So that's interesting. I'll show a couple slides that help explain this because it's a little bit wordy. One of the things I'm going to try to go through is try to explain some of this to unravel some of the language for us. Biliary Tract Cancer, so BTC, one that was very interesting. Recently got breakthrough from the FDA, and they're also tested in the GEA, so in combo with standard of care chemo. And they do have a lot of partners, and we'll talk about that in a second. They have Pfizer as a partner, they have BeiGene and Asia Pacific as a partner. And then their second drug is ZW49. So instead of ZW25, it's ZW49. And basically that just links their first drug, ZW25, with ZYME, an antibody drug conjugate, which is called ADC for short. So you might see that in the presentation slides as we go. And this is one that was recently, I think, a reason why the share price went down and why we might be able to get in, or why I'm looking at it anyway. And I think that's why a lot of these guys on Whale Wisdom were adding during the period, during this quarter, January to March quarter. You can see this here, like Perceptive added. They had a 2% of their fund stake, and now they have a 1.7. And like, well, they shrunk. No, they added because the share price went down so much during the period. And then you see how that with other people too. They all added to their positions. And some of them have been in it for a year already, 2 years, 4 years. Then you have quite a few that all of a sudden this quarter just added, including Micheal Burry. And you got to remember these funds all specialize in healthcare, right? And this is just like a 500 employee Vancouver, BC play. So it's not like a huge company by any means. So I'm surprised there's so many big name investors in this company. So anyway, one of the things you're going to notice as we go through it, there's a lot of partners for these guys, a lot of different cancers and a lot of different products they sell. So right down here, they also have their own type of products that they try to sell to their partners, really. Basically, it's like a tech transfer where they have the tech and they give it almost like a license to their partners, and their partners are able to run with it. And they've kind of divided it up into platforms. So this is the concept of the business model is basically they partner with somebody and they get paid as their partner goes through their trials with their combo. So they'll take the base ZW25 and they'll add it to what they have. So here they're adding their drug, zanidatamab, with something. So sometimes it might just be chemo and in combo with chemo and their own company's PD-1 blocker. PD-1, just for reference, is just basically it blocks PD-1, and that helps activate the immune system to attack tumors. So they'll take this core tech and they'll add their own drug to it. That's kind of how these partners are working through. And they go through the trial themselves, and then they pay Zymeworks based on progress that they go through, both in the clinical and then in commercial development, and then they get royalties as well. So it's a very interesting business model, and they have a really good slide on this. So they dosed their first patient here for a new study, phase 1B/2. And you can see they got $5 million for first dose. Here, same company again, first dose patient, South Korea, they get $10 million for this one. That's kind of how they worked with all these companies. As they go through their clinical trials, Zymeworks gets paid as they progress. This is the one that they were referencing on that one. I just wanted to Google this partner just to see kind of who they were, because it's the one they talked about quite a bit. Anyway, that's just their PD-1. That's the drug name for it. And I have to dig deeper, but I have to wrap my head around. And I don't own this company yet. I'm still going through the motions. So anyway, you can see what they're trying to say here. is that we're going to target HER2 cancers. HER2 cancers, just for reference before I go through that, basically it's just a growth factor receptor. Basically, HER2 protein causes cancer to grow and spread, but this receptor allows some of these drugs to hook in and treat it. So that's why certain drugs are targeting these receptors. So anyway, back to here, you can see this column here with the check marks is where they're able to target with their lead drug, or where they believe they'll be able to, because they have HER2 expressing cancers. So HER2 expression's in the blue and the amplification's in the orange. So you can see this quite a big range, right? Not all of the cancers have HER2, but quite a bit of each cancer type. And more importantly, you can see there's not a lot, aside from breast cancer and stomach cancer, there's not a lot of drugs that target HER2. There's a big opportunity here in a lot of cancers where there's not a lot of competition on the HER2 side. You even have pancreas and ovarian. And sometimes the standard of care could just be chemo, right? So sometimes they just have to show they're better than chemo. It's an interesting model. You can see why some of these, well, we'll talk about the results that they posted in January is pretty interesting. Anyway, just some more terms. When I say like first line chemotherapy, it might be called standard therapy. That's the same with other, it doesn't have to be chemotherapy, it could be any type of therapy. When your first line, that's the one they're going to do. It's the highest probability of treating a given cancer. And the second line is the one after the cancer still progresses. Another thing you're going to see as we go through this real quick is there's this type of jargon. So complete response is all the cancer and tumor disappears, no evidence of disease. Partial response, cancer is shrunk by 1%, but the disease remains. Stable disease, flat, no growth and no shrinking. And disease progression, obviously, is when the cancer is growing. So you're going to hear overall response rate, especially if you go through it yourself. Overall response rate is just what percent of the people are actually having a response to this drug, right? Is the cancer shrinking or not? You can see, so I have the investors that are amping up their investments, good investors that specialize in this space. Then I also have the drug itself being very much on the regulatory good end. You're getting breakthrough therapy, FDA fast track, FDA orphan drug for ovarian, fast track for GEA, right? Biliary tract cancer, you're getting breakthrough. It obviously, not only are investors seeing something, but the regulatory bodies in America are also seeing something. So it's very exciting. This is all for one drug for ovarian, stomach, and biliary tract. So it's like, okay, this is their development strategy for their lead drug again. And you can see they want to provide first targeted anti-HER2, this biospecific antibody. And that's one of the reasons why this got breakthrough, is there's not a lot in this space on the biliary tract side, whereas breast cancer already has some established therapies, right? So on the breast and the gastro, so stomach side, basically they want to displace the standard of care, or the first line. So you can see Herceptin and chemo, they want to displace that, and they want to displace the go-to for breast cancer, Herceptin, Perceptive, and chemo. And if sometimes you guys, I don't know how familiar you are with cancer, but like Herceptin, you'll hear this come up, or when you're reading through the 10K, and that's the chemical name for it. So they'll use these interchangeably, so it can be a little bit confusing. And then for Jetta, it's the same thing. And at the end, they want to diversify and expand. So they're going to start targeting the other cancers that have HER2 receptors, as per this slide right here. You can see they're trying to branch out. So kind of exciting, especially when sometimes they only have to displace chemo when there's no other HER2 drugs for that specific cancer type, right? Pretty interesting. Let's go this slide next. I got quite a few to go through. I gotta try to speed it up here. But you can see a lot of partners, big names, all big names. And what they do is they program an asset. So they're like, okay, we'll give you four programs to run with. So GSK has up to 6 for this type and up to 10 of this type. That's kind of how they did their platforming. Then you can see what they've made so far. So they made $213 million altogether. The company market cap is $1.3 billion, and they have signed milestones up to $8.6 billion, and that's both in clinical and development. And then you have royalties, and they range quite a bit as well. And you can see this, the Asia Pacific China company is pushing the envelope, because they only announced in 2018, but they're already the one who paid them the most, and they seem to be developing it quicker. That's something to keep your eye on. And you can see again which ones are coming, which catalysts are coming, whatever. There's quite a lot of catalysts coming. These are the different types of cancers they're targeting right now. And you can see biliary tract just with the zanidatamab itself, which is granted breakthrough therapy. And then they're also going to do first line zanidatamab with standard of care versus the standard of care for biliary tract. Anytime you don't see with, that means they're doing it themselves. So normally when you see all these clinical development pipelines at once for a company that only has like 500 employees, usually I'm like, okay, that's a lot of money. Right? That's a lot of cost to get this. So I can see why they're partnering certain things, and they're also trying to push the envelope. And I think as long as what that will do is trigger the rest of these companies to start using the licenses they've gathered, I think, because they'll start seeing, okay, we're getting real results. But yeah, they have a lot of studies and a lot of partners. Like I said, they got the tech transfer of the core drug, zanidatamab, and then they put in their own blocker or PD-1 inhibitor. And you can see that with Pfizer as well, the core, and then the Pfizer drug. And again here with this partner, ALX Oncology, core drug, and ALX 148. And again, the business model here, the tech transfer. So they gave this company the license to use this drug in their trials. They do all the cost of the trial itself, and then they pay Zymeworks as they go through the motions of clinical studies. And then if it's successful, they'll pay them when they're actually making the drug, and then they'll pay them as they sell the drug in terms of royalties. It's a very interesting business model. And they're also doing it themselves, which is also important in my eyes, because that pushes their partners to also push their drug, right? If they're able to show some more good results, it's going to incentivize all their partners to also start pushing this through their trials, right? And we're going to talk about the monotherapy, which is the core, with no partner in a second, because that's the one we have results on, which are pretty interesting, and the reason why I'm excited about it. And so anyway, gastric cancer, I kind of already mentioned this. Really, there's only 2 drugs that target this, are for HER2 high, but they miss HER2 low. So HER2 low, there's no real treatment for. And Zymeworks basically say we can treat HER2 low as long as they have HER2 positive, we can get it with our drug. And again, the same thing here. You can see breast cancer really opens the envelope for HER2 low, whereas all the competition is in HER2 high, or at least that's what the slide suggests, right? Now to the results. I'll blow this up a little. Yeah. So you can see this, their core drug, zanidatamab, by itself, and it's just looking at anti-tumor activity in the biliary tract, the one that got fast-tracked right after these results by the FDA, got breakthrough. And you can see confirmed partial response, 40%, 8 out of the 20. Didn't grow in 5, and it still progressed in 7. So the overall disease control rate is 65, studying the 25 and 40. So pretty good results, right? You got 40% of the people showing less cancer. Now this is the same thing, but this time it's in the GEA, in the stomach. And you can see partial response 39, confirms partial response 33, and that's pretty good as an alone drug, right? Ideally you probably want it in 40, but you can still see pretty good results out of 33 people. I mean, 13 still progressed, but it held steady for 27%, and it actually reduced for 39%. And now when you add chemo to that latest trial we just showed, so this one where it was just 39% partial response, if you do chemo plus their core drug, you get confirmed objective response of 54%. So you completely got rid of the cancer in one person, 1 out of 24. For half the population, you got shrinkage of cancer instead of growth, right? And then you have stable disease of 6, and then you only had 5 of the 24 progress. That's pretty exciting to me. And therefore you have a disease control rate of 79%. So you can see why their partners are like, okay, we're going to take chemo or something and add it to the core drug, and we're going to get more of a response. So this was posted on January 22nd, 2021. This is just the BTC one, the biliary tract one. And usually the first thing you want to look for, right, is the adverse events. And they're all grade 1 or 2. The most common, diarrhea, a single treatment related. Grade 2 was fatigue in one patient. So, I mean, and that, I think in my mind that's low. But again, I have only a limited number of benchmarks where some of today's oncology would be able to really quickly say like, oh yeah, that's good or bad, right? I know a lot of cancer drugs have a lot of side effects. I mean, these people are dying otherwise, right? Here's a slide again, and here's the 8.6 billion. I kind of jumped through it real quick. That is a big number, though in my mind I don't think that's all going to happen, but especially when the market cap is only 1.3 billion. 1.3 billion market cap. They do have some milestones, and what I wanted to do is see, okay, how exactly are these milestones broken up? Anyway, they do break it down here through partner, but again, it's not like, okay, one shot in the arm in this trial, you get $50, right, kind of thing. They still break it out, the total amounts in aggregate. Anyway, from the 8.6 billion, you can see 2.8 billion is preclinical work and development, and then 5.8 billion is in commercial milestone payments. So a lot of the 8.6 is actually in the commercial development side. However, they also get royalties on potential future product sales. Again, that's kind of how the business model works, and I actually like the business model a lot. And I also like that they're pushing the envelope themselves, which forces their partners to push their own products through. And it also gives the partners more reason to do so, right? Because they're going to have actual tangible results that should excite them. And I think the latest results should. The financials for biotech, never good, usually. They're issuing shares to fund the trials. You can see that here, going from 12 million shares, 21, 29, 38, 50 million shares. And the revenue is really just based on partnerships pushing through their own trials. balance sheet, they do have a lot of cash, but they are burning it. Total current assets 432 million, which isn't bad because the company's only worth 1.3 billion, right? So they do have quite a bit in cash, but they are burning it quite quickly, right? They're burning about 40 million a quarter. Real quick here, let's just say this is 400 million right here. So what's that, 10 quarters? So 2.5 years. But the thing is that the burn rate's increasing, so it's less than that. And the reason why it's increasing is because they're hiring a lot of people. This is just on an Indeed website for Vancouver, and you can see there's a lot for Zymeworks. There's 20 job openings, and like I said, I think this employer is only, I want to say, between 400 and 500 people, and they're all high-paying jobs, right? These are scientists and data engineers. I mean, pretty excited if you're in Vancouver and you're a scientist. Anyway, it shows me one cost, and the cash burn is going to increase, but it also shows me that they're also excited about their recent results in the clinic, and they're also pushing it. So now I have the investors adding to the position, good healthcare investors too. Then I have the FDA giving them various lines, giving them breakthrough therapy, giving them fast track, and giving them orphan for different cancer types. And then I have the company itself also amping up its investment into its pipeline and clinical studies. So I'm looking at this and I'm like, okay, so we can see that market was getting it right initially, that this could be something big. So it's been pretty volatile with the COVID panic. It went down to 27 a week before, and it bounced out of there. People started buying it there at 32, and then it was up to 56 very beginning of this year, and then something happened January 24th. I obviously want to see what happened. Anyway, this news article was on that day, right after that day. And anyway, the analysts wanted more, like 40 to 50% response rate, right? So I see some drama. And then I'm like, okay, well, what actually happened, right? So I try to go through ZW49 here. Then I do see one adverse reaction at coritis. Whenever you see itis, it just means inflammation of. Coritis is inflammation of the cornea. So a different adverse reaction for this drug, ZW49, right? Which isn't their lead, but it does take their lead and add ZYME to it, which is a cytotoxin. And they have been still escalating this, despite this escalating the dose rather, but there hasn't been any other, at least, disclosures of adverse reactions yet. Every week this goes by, I'm like, okay, it's probably a one-off, right? But we'll have to see. But they say there hasn't been any no dose limiting toxicities, so they're still upping the dose. And this one's going 3 milligrams per pound once every 3 weeks. They're upping it. And so when I looked at the latest results for this ZW49, because this is the reason why the share price fell, it wasn't even the core lead drug. So I was like, okay, you can see what the extra, in terms of breast cancer, you can see tumor volume still decrease with the higher dose rate. And even here, when you get up to 12, and they went up to 18 in primates, so you can see tumor volume down quite a bit. And again, tumor volume at 6 milligrams. And then cytotoxicity. So this is actually a good thing, this slide. They're like, oh no, it's more toxic. No, it's toxic to the cancer cells. So it's killing more cancer cells. That's what this should suggest, right? And that's what it looks like, because when we looked at the tumor volume, you can see it being decreased quite a bit. So it's a pretty interesting drug, and I'm still trying to wrap my head around it, right? They do have quite a lot of catalysts, whether it's with partners or themselves, in the next bit. And I got investors adding to it, smart investors, are smarter than me, that are in this space. Then you have the FDA giving them all these extra, like breakthrough therapy for BTC, you had orphan drug status for Ovarian, and then fast track, and orphan for Gastro, Esophageal. Quite a lot of stuff. And then you have the company also upping their efforts in this field to really start amping up the clinical trials. So it's a very exciting time for this company. So again, with biotech, it's always kind of like a race to the next milestone, and if it's slow, then they're gonna have to dilute again by issuing more shares, right? Now they do have 400 million in current assets and cash equivalents, but I mean, they're burning 40 million a quarter at least, and it's just going up because they're hiring more. It's always a fun thing on biotech, right? But this is a very exciting company, and I still need to go back and forth. Like, ideally, I want to go through, not only because I'm more familiar with their core drug, but I need to know the partner's drug, and how will those two likely react, right? And what are the side effects of their own drug, right? If that Pfizer drug had a whole bunch of side effects and they're adding it to ZW25, what does that mean, right? What are the likely outcomes of that? So I need to still dig deeper, but I like the business model. And the science so far looks pretty good, right? You can see why. Obviously, the FDA, the investors in the company all see something, right? Anyway, I'd like to know your thoughts. It's a little bit heavy on the biotech side, a lot of vernacular and jargon in there. Hopefully, I was able to explain it as best I could. If it wasn't, it's more a reflection of my understanding and trying to express it than it is on you guys. But yeah, anyway, have a great rest of your week.